at that time.
Let's go to a Bill in Boca Raton. Hey, Bill, what's going on?
Not too much. Enjoying the warm weather in Florida just like you, except on the other coast.
Perfect, man. Perfect.
Yep.
Do you listen on the internet right now?
Yes.
Cool, man. Cool.
No, I enjoy that. That's in your Tiger TV and everything. I've been watching you for years, and you've really taken this whole programming to a level that's just phenomenal.
I appreciate it.
And now, here's Tom O'Brien.
Good day, traders. Hi, folks. I'm your host, Steve Rhodes. I am filling in for Tom O'Brien. And sorry for that slight delay there. We had just a little technical difficulty. But thanks so much for joining us. This is absolutely my favorite thing to do, my favorite time of the day. And, I am co-host. I kick things off for TFNN at 9 a.m. every day, Monday through Friday. And then Tom and I do a show called The Money Masters from 10 to 11. And every Tuesday and Thursday, I do a show. I follow back up with one more hour of the Trader's Edge show, and that's from 11 to 12. You can catch all of those shows. They're archived at TFNN.com, and you can catch those shows on Channel 14 or Channel 15. But thanks so much for joining us, folks. Let's get straight to these markets right now. We had the Dow finish down one second, though, folks. You know what? The best way, and what I'm really all about, is education. And really, what you can do is you can watch us on Tiger TV. If you go to Channel 1 or just go to the homepage of TFNN and click on the button for Tiger TV, you can catch this show live. And 85% of what your brain processes is visual. So I want to be able to teach you something, and it'll help when we go take a look at these markets. So let's get back to these markets here. We had the Dow finish down 248. You had the S&P down 2267 at 1192. You had the composite down 49 points at 2523. You had the small caps. The small caps were the leaders on the way down here, down 17.5 points at 701. You had the NDX down 1.9% at 42. That traded down 42 points. And let's see, King Dollar. What was King Dollar? King Dollar only up 18 ticks. We're going to go take a look at that. You had the gold contract down 41 bucks at 1683. Silver right now down 72 cents. You had light sweet crude. Where is that little puppy? You had light sweet crude only down 35 cents there, folks. And so let's go take a look at the S&P 500 and see where that baby is. And on the S&P 500 right now, what I've got up on my screen here, that didn't work. On my screen here, you can see that what really happened here, and hopefully you're watching this on Tiger TV, is that we had been in this upper channel, this sideways consolidation, for a couple of weeks. And we went in that consolidation right about the day of, let's say, October 21st. And we moved sideways. We traded up higher on October 27th, up at the 1292 area. And what was happening, if you're watching this on Tiger TV, what you'll see is this little triangle that was formed. And in that triangle, folks, it kept getting narrower and narrower. Now, that triangle pattern is typically a continuation pattern. And in this case here, you would have expected that the continuation was to the upside. So you would have expected a breakout up there. Now, the mere fact that the S&P did not break through the upside was absolutely sending all of us a signal here, a real loud signal. Now, what it was going up against, if you're listening into either my show or Larry's show, you know that we take a look at astro aspects that are out there, whether lunar aspects or other aspects. And on the 27th, the high that we have out there is a real powerful date. It's a 17 planetary index date, and if those highs get taken out, then we're going to have some real bullish sentiment, if you will, from a chart standpoint. But when you put this into, when you really take a look at the chart patterns, and that's really what it is that I'm all about. I'm not here to have an opinion of what the market is going to do. When I show up each and every moment that I look at a screen, when I'm taking a look at a trade for my clients or for myself, it's really to say, what are the markets communicating to me? Because what I absolutely love about the system that we trade here, it's just about interpreting the markets. And so when you take a look at that triangular wedge on the S&P, folks, when we broke through that, and you broke through that through three trading sessions ago on the 17th, and you did that with some conviction, and folks, and when we came through there, we also came through, I'm also, take a look at these Japanese candlestick formations. And what we had out there was we had two bearish engulfing candles. One was on September the 1st. The high out there was 1229. You had another one that came in on October 17th. The high out there was at 1224. Now, what's also important is to understand the lows on that. And the low on that candle there was 11.98. That was on October the 17th. And you came crushing through that today with some wide price spread. And so, so we had conviction, if you will, by breaking down. And it's really important to understand that when you have a pattern that really should trade to the upside and it doesn't, that's sending us a signal. Now, one of the other things that I want to do, and I shared this with the listeners today, and this is kind of a sneak peek for all of you, that what my clients get. Now, I typically don't share on the air exactly what my clients are getting. I produce a daily investment and trading newsletter called Mastering Probability. What I'm going to do here is I'm going to pull up the screen for the NYSE. I think it's going to be the NYSE that I pull up here. Let's see. The NYSE, when we're taking a look at the channels that are out there. Now, hopefully you can see this, and this really goes back to 2000. So when we take a look at the run-up from 2000 to 2007, what you can see here, you've got this little blue channel line that the New York Stock, and I like looking at the New York Stock Exchange because it's representative of the marketplace. You've got a wider breadth of stock. So it's not like the NDX 100 where you've got Apple, that's a significant portion, or it's not the Dow where there's only 30 stocks. This has got 3,000 plus trading, stocks in each and every day. So you've got a better breadth of the market. And what you'll see, how these markets move, there's really some beautiful harmony to them. And so you can see the up channel that the New York Stock Exchange, the symbol on that is the NYA, and all the way up to the tops in October of 2007. Then you can see how how the NYSE moved down, and it moved down into the March lows, and it moved inside this channel. Now what we had when we came up from those March lows to the May highs of 2011, you can see that channel that we've got there. And now, folks, what's happened, which I want you to understand, because what I'm really all about is helping you protect your money. There's nothing more important when you take a look at trading and whatever it is that you're doing, and it is about being able to protect those assets, because missing out on a trade, that's an opportunity loss. But when you actually lose money, folks, and what I really do is I teach folks about the 1% principle. I teach you how to only risk 1% and how you can turn that into substantial money. In fact, in my trading newsletter, folks, we only trade 1%. We don't risk any more than 1% on any trade. But we're up on an annual basis right now over 36%. That's not even including today's winners that we had. Some transactions, some ETFs that we ended up getting. We let the market stop us out as it was moving up and down. So what I want you to understand, folks, is you got to look at this down channel here. If you're listening to us on the radio, thanks so much. Go catch the archive of this so you can see this, because this is a really important chart. Our call number is 877-927-6648. We'll be right back, folks.